welcome everybody to Living Off Charts Trading. Today I'm going to be breaking down a GBP CAD trade I took where I made over $2,000, and multiple of my students caught the same in the group. I'm going to be breaking down how to actually frame the high and the low of the week using the economic calendar, so make sure to stick around for the entire video. If you want access to the PDF of this video, make sure to hit the link in the description. There's also a 7-day free trial if you want to join us in the Discord, and enjoy this educational.
Right, welcome everybody to the breakdown of this GBP CAD trade where we're going to be discussing the power of 3 of the weekly candle. So let's go over the key takeaways of this video. We're going to be talking about higher time frame narrative. Obviously you want to work with the higher time frame if you want to predict what the weekly candle open high low close or open low high close will be. Then we're going to be talking about time frame alignment. As you guys know, I am very proficient in time frame alignment. This is actually how I look for entries. Then we're going to be talking about order pairing as well. And order pairing can also be used in the right context, the right narrative, and also to find an entry. Now, what we're also going to be talking about is time. And this is what a lot of people overlook, because if you trade within the correct time, you will be in a better position during a day trade. Now we're going to be talking about that a little bit later, and obviously the daily profile for this trade, we're going to be discussing that as well. So now let's start off with a blank weekly chart. Where are we coming from and what is the market profile, right? So we have a weekly chart over here. So if you have to determine where the market will go, you need to find key levels. Where are we trading from and where are we trading towards? So what is the actual market profile? Are we bullish? Are we bearish? Or are we going sideways? So now let's look at this key level over here, right, with a weekly fair value gap, and look at how this displaces up higher, right? So we have an impulse swing over here from a key level, and now we actually have a range where we can work with, right? So once price comes back into discount, this is where we can look for a reversal, right? Because price expands and reverses back into discount, and then we want to see a reversal back into buy side of the curve. So now how are we going to determine if we're actually going into buy side of the curve? We need a key level, right? So a key level needs to be hit in discount. It doesn't matter if that key level is in premium, we want to be in discount. Now what solidifies a key level? SMT, right? So now we're zooming into the daily chart. We've got a SMT down here with EuroCAD on the lows, right, in that higher time frame key level. Now this is for me as confirmation that that key level is very strong. And if we look deeper, we're going to look how are we going to determine we are disrespecting sell side of the curve, right? We're looking for bearish arrays, which is a bearish fair value gap. If that gets traded through, that's an indication we're going into buy side of the curve. And now a little tip, if you see an opposing array formed from sell side of the curve into buy side of the curve, which means this down close candle over here, right, and it gets traded above, that is even a better indication that this is going into buy side of the curve. Because if we form down close candles on the buy side of the curve and we trade above them, we can use them as an actual support level, right? So now we're going to talk about order pairing. If it goes too fast, make sure to scroll back in the video, of course. But order pairing, you can use this for higher time frame narrative, right? The market moves from old lows to old highs. It goes from external to internal, which means it takes out an old low and goes back to a fair value gap on internal range, or it takes out a high and goes back into discount on a fair value gap, also in internal range, right? So order pairing means we're going to accumulate the sell stops down here and pair them up with the buy stops that are resting above that range high up there. So this is also a good narrative for seeing higher prices on GBP CAD. Earlier we saw the disrespect of that fair value gap, and now with the order pairing we can be confident that we want to hold our position towards range high. Now if you want to frame the power of 3 of a weekly candle, you need to see where the weekly candle opens, where it trades first. Does it hit a key level? Does it reverse straight up? So if we mark out the weekly open over here, right? So this is Monday, then Tuesday dips back into a fair value gap, right? And we're in an expansion phase, right? So we don't have to reverse back into discount again. So Over here, weekly opening price, Monday consolidates and Tuesday dips back down into a key level. Now, why is that important? Because we can frame the high or low of the week using the economic calendar. Now, on Tuesday, we had CAT CPI, right? So this is high impact news. Now, using the economic calendar as a roadmap of where the low of the high or the high of the week is formed, we can use that specific day to see if it taps into a key level. Now, we did that over here, right? We tapped into that daily fair value gap below weekly opening, right? And then it expanded up higher. So now we can assume Tuesday is low of the week. And with this information, you can actually frame trade setups for the rest of the week, right? Because you already know, okay, Tuesday is going to be low of the week, and now we're only going to be looking for buys the rest of the week. So now that we have determined the higher time frame narrative, we have framed the low of the week through the economic calendar, and we're going to now apply time frame alignment. So we've got a 4-hour chart over here, right? So we went from weekly to daily. Now we're in 4-hour, and we can see the weekly opening was here. Price dipped back into that daily key level, right? And then expanded up higher. So we have a new range to work with. So we want to be in multiple bullish ranges, right? For a high probability bullish setup. That's why we looked for buys this week. So once price forms a new range, you want to wait for price to dip back into discount. So that did happen over here, right? 4-hour dealing range, dipped back into discount. Now, what makes this low strong? SMT, right? You never want to sleep on SMT. SMT confirms a high probable smart money reversal or strong lows or strong highs. So make sure you have that as well in a key level. Now we're going to zoom in into a 1-hour chart, right? So price traded back into a 4-hour discount, and now we want to see an indication, are we actually going bullish in this specific day? So this day was Wednesday. We know Tuesday with the CAT CPI, we made low of the week. It displaced up higher, and now trading down lower back into discount. What do we need to see if we want to determine if we are on buy side of the curve? We need to see bearish arrays get violated and then an opposing array get formed on that violated area, right? So we can actually see over here, price comes up, violates this up close candle, which should support price lower, and then we have another candle formed over here. So now what do we have? We have a 1-hour change in the stated delivery order block, right? So with this, we can anticipate this potentially being the low of the day. Now what is even better, it happened below daily opening price, right? So that is nice for a classic buy day. This is not a typical classic buy day because we expanded actually below daily opening price with New York session. So I would just say it's a delayed protraction. If we zoom in a little bit more, we form another down close candle on top of that 1-hour change in the stated delivery order block, right? Which is a propulsion block. Now, characteristics of a propulsion block is that price needs to expand away with it with some volatility, right? Now, also, I want you to focus on the correct time because time is very important in trading. If you focus on 9 a.m., which is the 4-hour candle opening, right? You can use the same concept as a weekly opening, power of 3, but you can also use it on a 4-hour power of 3, right? So you expect the 4-hour candle to dip lower into a key level and then expand higher. Now, zooming in on the 50-minute chart over here, we're going to determine, are we actually going into a market maker buy model? So what happens after a smart money reversal? We have a smart money reversal down here, right? Because we tapped into discount, price displaces up higher, then price comes back down below in discount of this new leg that formed. This first retracement in this bullish range is the low risk buy. Typically, you don't want to enter here because unlike the name says low risk, it's actually higher risk because buy side of the curve has not been confirmed yet. So why it's called low risk in my opinion is because you should put on lower risk if you do want to have the best entry in this first leg. But I like to wait for the low risk buy to happen first and then trade the expansion that comes from it. So you have first leg distribution. This is key to avoid more losses, because a lot of you want to trade this one, but if you just wait for the actual distribution phase that comes from it and low of the day has been set, you will avoid a lot of losses. Now, SMT again, right, is key in knowing if there's a strong high or a strong low. You can actually see we had SMT on these lows, and then furthermore we had SMT on these lows as well, right? So now I can confirm these lows are pretty strong. GBP CAD is a lot stronger than EuroCAD, because EuroCAD took out all these lows down here, while GBP CAD did not take out these lows, right? And now we're gonna focus on that key time, 9 a.m. open, low, high, close. This is the anticipation of that new 4-hour candle, right? And you can actually see I marked out 9 a.m. open, right? The 4-hour candle opens up, dips down lower into that propulsion block I outlined earlier on the 1-hour chart, right? Because that confirms for me we're going into buy side of the curve. Now we just need to get an entry on the lower time frame. So we have aligned 4-hour into 1-hour, and now we want to look for an opportunity in the 50-minute chart. Now, over here, we did not dip into discount of this leg, right? But it is not required. Why? Because we had a fair value gap over here, an inverse one, where it can reject from. Also, EuroCAD dipped back down all the way into discount, even took out this low. So then you have SMT, right? So then it's still okay that GBP CAD does not go into discount. So what I did literally was just enter over here. I got slipped a little bit on my entry, and it filled me up here, which was kind of unfortunate. But nonetheless, price expanded up higher, right? So just to summarize, the result of this trade was framing low of the week down here with the economic calendar, right? Then focus on the next few days until we hit that range high. And this all stems from order pairing range low to order pairing range high. And you can see the result over here. We framed that this would be low of the week. We focused on Wednesday's candle. Expansion happened into the high, and that is literally the only trade you need in 1 week. And let me show you the execution over here. Like I said earlier, it filled me a little bit higher, unfortunately, but price dipped back into that 1-hour candle, right? This is 9 a.m. Dipped back down. I wanted to enter, but it filled me up here. I partialed above the high, which was like 2.5R or 3R, so that is a very good partial. And then I had to close the position over here because we had high impact news, and I could not hold it longer because of the funded account rules I was working with. Unfortunately, I missed out on another 1.5K here, but in the end, it's all about taking consistent trades, right? So now let me play a clip for you from the actual live stream where we took this trade, where I outlined what should hold, and it's a small little clip, so there's a lot more information in the actual recorded live stream, which is in our Discord, and you can sign up with the link in the description. So I hope you enjoyed this educational, guys. Make sure to like and subscribe if it was helpful, and I will see you in the next one. Yeah, if we do close above the 1 hour here on GCAT, I think low of the day should be set. Yeah, if we close above on the 1 hour, I'm probably gonna enter on GCAT. We actually have low of the day printed then. Daily order block, 1 hour propulsion block, 15-minute low risk buy in a market maker buy model. Yeah, GCAT looking very nice. So that's in 18 minutes. We have a new 4-hour candle. Then I would prefer price to dip back into discount of the new leg it's forming up right now, and that should be the entry. Isn't GCAT in premium? It's expanding right now. So if there was a swing high, then you could assume price will go back to discount, but it's expanding higher right now to this high after doing a double purge. So you can assume, because we tapped the daily fair value gap, formed a down close candle, and this can be used for higher prices.
There's nothing really else you look at because you have AMD and a V shape, and a V shape will occur from either an AMD or a double purge.
Oh, I see. Yeah. Okay. Yeah. So this can make GCAT not come to discount on the 50-minute range, because ECAT is already going there. So this could be enough. Just this little tap into the propulsion block. Partial.
If you're at 123 at previous day high, there's no need to be greedy. 123 is more than enough for 90%.
Yeah. Yeah, I'm gonna partial above this high because I'm up, like I was like up. Let's see, what is this? Yeah, a little bit over 1R, 1.3R I was up, so I can partial at 1.3R. So I'm just gonna let it run to previous daily high.